What's up, guys? So, in this video, we're going to talk about Netflix stock, guys. So, Netflix is a stock that I've been holding for a very, very long time. And it's one of the few stocks in my portfolio that I actually never plan on selling. Netflix is such, I think, a great business, and it's such a straightforward business that earns money basically by adding paid subscribers. Streaming platform. Of course, if you guys aren't familiar with Netflix, they are the world's biggest online digital video company. They basically have online movies and online TV shows. So let's take a look at why the stock actually went down. So if we take a look at the year-to-date chart, we can see that Netflix stock had been on an absolute tear so far this year. The shares are up about 49%. And then recently they posted earnings, their Q2 earnings release, and the stock plummeted. So the stock was currently trading, it almost looked like it was going to head to $600. And perhaps some people bought at the top. As you can see here, guys, the stock was at around $570, which was an all-time high. And then the stock pulled back all the way to $467, kind of leveling off at $493. So, guys, I'm going to kind of explain exactly why Netflix stock went down so much. And so, to do that, we got to take a look at the Q2 earnings reports. Let's take a look at that right now. Okay, guys, so you can find all this information if you simply go to netflixinvestor.com. So as you can see here, we're reading the shareholder letter by Reed Hastings. He's the CEO. So as you can see here, they they had a significant growth in the company because a lot of people were spending a lot of time at home and subscribing to Netflix. But the reason why the stock is down is it says, as a result, we expect less growth for the second half of 2020 compared to the prior year. So this is pretty much one of the reasons why the stock is down. Usually when CEOs basically, explain that there's going to be less growth in the upcoming quarters. Usually, lots of traders and investors, if they made money on the stock, they simply sell off the stock, take their profits, and move on to a next one. But I'm a long-term Netflix shareholder. I think this is a great opportunity to buy on a dip. Netflix is a stock that is a gift that keeps on giving, in my opinion. And the reason why I like it so much is because it's very, very easy to understand its business model. So as you take a look here, you can see that revenue is basically just consistently going up. So Q2 2019 revenue was 4.9 billion, and then to 2020 6.1 billion. So year over year growth is around 20% and very, very stable and very, very predictable. As long as Netflix continues to add subscribers, they're going to make more money. And as you can see here, they went from 151 million subscribers to almost 200 million, so 192 million subscribers. So as you can see here, the Q3 forecast, that's a big, considerable drop. Last year Q3 they projected around 6.7 million, and now they're only projecting 2.5 million. And I'm assuming that's basically because Netflix is definitely a cyclical business, and the fact that a lot of people are kind of going out and spending more time outside the house. They're not literally at home watching so much streaming content as the lockdown eases all over the world. So that's why I think that the shares are down. But the good thing about Netflix is that as we take a look here, that free cash flow number is way up. And, obviously the company slowed down a lot of their releases due to the whole, pandemic situation. I think that we're going to see a lot of nice new content coming out from Netflix. So also one of the biggest changes is that they appointed Ted Sarandos as co-CEO, which probably means that Reed Hastings is probably thinking about stepping down. I would assume, Reed Hastings has been the CEO for Netflix for a very, very long time, but we always know, he's in his 60s, so we're probably all Netflix shareholders are wondering, when is Reed Hastings going to step down and perhaps let somebody else take over. So that's another thing to look at. And then as we can see here, they're talking about basically the forecasts, and this is one of the reasons why the stock is down so much. But the good thing about Netflix is that obviously they're expecting paid ads to be down a little bit. because in Q3 2019 they had the impact of the Stranger Things and the Money House, which really added a lot of new subscribers, and they're not really releasing that new content this year, so they're only expecting 2.5 million ads. But as we know with most things, Netflix is definitely a company that continues to surprise us, so I wouldn't be surprised if they exceed that 2.5 million number by quite a bit. I think that is a very, very low um, estimate, which is why I think that the stock is a very, very strong buy now. Netflix is one of those stocks where you can really, really, really do well over the long run if you continue to acquire shares. So here they're talking about some of the content that they're releasing, and they on in 2021 they expect Paul's productions will lead to more a second half weighted content slate in terms of our big titles. Although we anticipate the total number of titles for the full year will be higher than 2020. So the thing is obviously 2020 there was a bit of a slowdown, but they have a lot of new content planned for 2021. And Netflix is just it's the behemoth of the video streaming industry. They're the top dog. Netflix is king in my book. So for you guys that bought at the top, if you guys bought shares at around say 500, okay, so for you guys that perhaps bought shares at $570, right now, let's say you guys had, bought at the top, you're down about 10%, which isn't too bad because Netflix is definitely a stock for me that is a long-term hold. If you're looking to trade stocks, there's other stocks that are in much hotter industries. Right now EV stocks are still crushing it, and there's a lot of new IPOs and a lot of new SPAT companies coming out. So for me, if you bought now, you can easily add to your position. But if you thought you were going to trade this stock and it was going to go to 600, perhaps you wanted to move on to a different company, guys. So let's continue down and let's take a look at some of the competition. So one of the things that kind of jumped out to me in the shareholder letter was the mention of TikTok. I've never heard Reed Hastings mention this company before, and I'm real familiar with TikTok. It's basically a video kind of video sharing app based out of China and Asia, and the growth has been really, really astounding, as they mentioned. So it'll be interesting to see if TikTok's parent company goes public, perhaps maybe next year. That's definitely something to look at because, as I mentioned in many of my videos in the past, video is the future. So any companies that are doing great things in video, whether it's Apple, Amazon, you have, of course, Netflix, Disney, any company that's getting involved in video streaming is definitely something to take a note of. So guys, let's kind of just take a closer look at those breakdown of those subscriber numbers. And as we can see here, Netflix, just the revenue keeps increasing and memberships keep going up. And I think this is a time where I think people get really, really impatient with Netflix. They expect that they're going to grow like crazy, all the time. And the fact is, as long as the company continues to add subscribers and as long as they continue to increase their revenue, I think you're going to do really, really good well with Netflix stock over the long run. And what do I mean over the long run? Well, guys, it's not just enough to kind of look at numbers and individual quarterly letters. I like to take a long-term holistic view at a company like Netflix, which I think is one of the best stocks that you can buy. So if you guys are a complete beginner and you're new to the stock market, Netflix is definitely a stock that you can buy and hold for many years to come. So let's take a look at those trailing returns over the. Okay, so what do I mean by trailing returns? Well, I like to use a website called Morningstar. You can simply go to the morningstar.com and type in the ticker symbol Netflix here and click trailing returns. So this tells me exactly how much Netflix stock is returning each year. So as you can see here, over the last 15 years, Netflix stock has returned around 42% annually. So even though people are kind of worried about this 10% dip, as they basically projected a decrease in subscribers over the next couple of quarters, I think in the long run you're going to do really, really well. Earning a 40% compounded annual growth rate over the last 15 years is just astounding, and it just shows the strength of Netflix, the Netflix brand. And I really don't think that we have any major problems coming up. The co-CEO situation is kind of perhaps a signal that Reed Hastings is looking to perhaps step down as CEO. But even though the same thing with Microsoft, Bill Gates stepped down from his company and Microsoft continues to churn. Steve Jobs, he eventually stepped down from Apple, and Apple is still doing well. So I don't think Reed Hastings perhaps stepping down in the future will impact the stock that much because the company is so mature and so many people enjoy Netflix. So for you guys out there that got a bit crushed on the dip, I would say hold for the long term because as we can see here, if we take a long term holistic view of Netflix stock. Okay, so if we take a long term holistic view at Netflix stock, we can see that patience has been rewarded and the company has been absolutely crushing it over the long run. So since the company IPO'd, shares are up over 50,000 percent, 51,599% to be exact. So I wouldn't worry here if you bought at the top. It's definitely a pullback was definitely expected since the stock had ran up so much. But I still think this is a good buying opportunity. I'm always looking to add quality stocks like Netflix to my portfolio, and I suggest if you guys are looking for a stock, if you're a complete beginner, this is kind of one. This can be one of the core foundations of a nice long-term portfolio. So that's it, guys. I hope you enjoyed this video about why Netflix stock went down. And it's pretty interesting, guys. I really recommend reading those quarterly reports. You can head over to the IR relations part of these companies and check out their quarterly earnings reports. It can really help you improve as an investor over the long run as you learn more and more about the business and you kind of understand exactly what's going on when you see these stocks move up and down. So that's it for now, guys. Hope you enjoyed this video. So please smash the like button if you enjoy my content and smash that big red subscribe button to get more videos on Netflix and other high growth stocks that can make you a lot of money. So that's it until next time, guys. Take care.